all of our
All
platforms.
right. All right.
Sorry about
We
that,
are now
people.
on, folks. We want to thank you for that small technical difficulty. Black Men Speak is now on. We want to welcome everybody. Of course, I am TD Duncan III, your co-host, and my colleague Jimmy.
I'm VJR Stewart, most fascinating man I know.
All right, so we apologize for being a couple of minutes late
Yeah,
on
that's on me.
stream, but now we have got everything moving. We will, of course, introduce our colleagues and good friend, Tirrell Richard and Dwight Johnson, the money man and the man who finds you the property. We'll have them to briefly introduce themselves and what they do.
Okay, I'm Tirrell Richard. I am the branch manager with Effendi Mortgage. I have two locations, Plano and Arlington, and I help my clients find money and find what's out there to help them realize their dream. There's money that the government allows. I mean, the government allows for first-time home buyers. A first-time home buyer is not somebody who bought their first home, but somebody who has not owned a home in the last 3 years. So we help them find that money. But besides that, we help anybody to get in the best situation possible and get the best deals possible.
All right. I always love getting a chance to come on with Brother Tirrell. I am Dwight Johnson, CEO of the D1 Realty Team, powered by Keller Williams, Houston Memorial. I service all things real estate in Houston Metro, whether you're buying, selling, or investing. Aside from that, I have a very extensive real estate network throughout the U.S. and throughout the country as well. So I can pretty much help someone that's looking to make real estate moves anywhere in the world. And what my team and I do, we consider ourselves to be small but mighty, but we do pride ourselves on having the most informed clients. We don't make decisions for our clients, but we certainly give them all the information, all the real-time data and information so that they can make the most informed decisions for themselves using the vehicle of real estate to build wealth.
All right. Well, let's say hi to cousin Audrey Booker, who just joined our
Perfect.
chat
Perfect.
line. And if you have
We
any
appreciate
questions, people, for Dwight or Tirrell,
and
please post them, and we'll make sure we get you an answer.
all right, and also would like to, of course, welcome our good friend and colleague, Uncle Asar, who, of course, doesn't usually show up on the chat line, but he, of course, is always watching. We want to thank him for showing up for us as well, and we look forward to some more folks jumping on the chat line, number one. And number two, make sure that you do bring your real estate questions. So we're going to start off by looking at the rear view mirror and talk a little bit about what we've seen in the last quarter. I think the last time we had you guys on was during the midsummer. Talk about what's happened since then. We know, the biggest thing is probably the interest rate cut, first one this year. But wanted to get both of your views in terms of what you've seen over the last quarter, and then we'll look forward.
You want to start that out, Brother Tirrell? You want me to get that?
We'll start out with you, DJ.
Okay. As we look back, Q3 was lots of speculation about what was going to happen. Not unlike 1 and 2, just nothing happened really in Q1 or Q2. But all the speculation of the Feds making moves, looking at the labor market, looking at inflation, things like that. So we saw a lot of our mortgage partners start to make moves in rates in anticipation of that move. So what we saw is applications go up from our clients that have been waiting on the sidelines. We got more buyers under contract to start getting out shopping, and even starting to see a few more sellers having conversations about finally entering the market. So more applications, more activity from the buy side.
Yeah, correct. That's basically what I've
What
seen.
about on your side, Terrell?
Yeah, it's basically what I've seen. The same thing. It's definitely been a buyer's market where buyers are able to put in bids for homes and get more seller help than they were in the recent months past. The rate drop, helped a little bit. It's going to hopefully increase a little bit. It didn't go down as much as we wanted, but it is something that's definitely helping. But there are also some definitely speculation on, we may be looking at how housing prices go down slightly, but we'll see what the future holds.
So what would influence housing prices to go down? What are you seeing there?
What I'm seeing is, during COVID up to now, some of the houses sold a little bit higher than what we thought they would, and we're having a lot of people that can't afford homes, so it's going to correct itself. It has to correct itself. It will, and it's going to put it to where it's affordable for the main buyers out there.
Gotcha. Sounds good.
And what about
And
inventory
interestingly enough, I
levels?
was reading an article over the last day or so.
All right. Go ahead, Tom.
I'll defer to Jimmy on that.
Oh, no, I was going to ask both gentlemen, how are inventory levels, home inventory levels?
Just as I said, they're starting to get a little bit better. I think they're lower year over year or year to date than they had been, but we are starting to see them getting better. Builders are getting more product on the ground. Lumber prices are coming down, so we're seeing way more housing starts. And as I stated in the look back to look forward, starting to see some of those buyers that maybe wanted to make a move, but they didn't want to give up their lower interest rate, et cetera, starting to see some of those have conversations about entering the market. So the inventory is getting better. It's still not as high as it should be, but there's improvement in inventory.
Makes sense. And I was reading an article within the last day that said there's a possibility, or at least there are innuendos that the Fed may cut rates at least once, possibly more this year. What are you guys hearing and seeing?
Yes, that should happen. What I've noticed is that a lot of builders have more inventory than probably what they really want. I'm seeing a lot of builders that are making different deals that kind of affects my business, but that's correcting itself, and it's going to come to a point where rates are going to come down to where we're able to help out, more in those areas, and we're just trying to make sure we're there for the clients that need the help. Also, one of the biggest things I've seen with this might be going a little bit ahead of it with the government shutdowns is some money that used to be available has not been available. But what I'm hearing is that that may, change, in the recent future, in the near future, I should say.
Now, when you mentioned that some of the folks that you're dealing with are seeing higher inventory levels, I'm assuming that's in single family housing, or what does that look like in what sectors?
Yeah, primarily in single family.
Yes.
Okay. All right. Good deal. Okay, I'd like to welcome Ms. Tanya, who just
Hey,
joined the
Ms.
chat line as
Tanya.
well. Thank you for.
Welcome.
All right, let's go ahead and kind of move forward. Obviously, the biggest news that we've had over the last week is the government shutdown, which of course is affecting primarily federal workers. But let's kind of start digging into if and how that affects your business, your clients, what that looks like, and then maybe forecasting, questions that may come from our audience who is watching us now or in the future. How is the government shut a little bit over a week now been affecting your business and or your clients?
You want me to take that one off the bat? So
We'll start with Tirrell.
Okay, go ahead, Tirrell.
Yeah. The way it's affecting us is that we actually depend on the government to make sure we're making the correct loans. We do collect clients' information such as tax returns, but we just don't accept their tax returns. We have to validate those tax returns. With some of the government shutdowns, we used to be able to depend on the IRS to deliver us, transactions that let us know, so they could show us what was filed within 7 days. Now it's taking up to 20 days and sometimes a little bit longer. So it does slow down how we can approve a client, because we have to make sure the transcripts that are coming from the government matches what we received from the client. And with more than half the IRS, being shut down, it's a little bit more difficult on them to deliver the product to us as timely as they used to.
Gotcha. And from the real estate side, how did
So that is putting you a little bit
Yeah,
further.
makes our closing date push out a little bit more. Sometimes we're able to get the clients to log on and get it themselves. But when we can't do that, it does push it out a little bit, and we just communicate with the sellers to let them know that it's not our buyers, it's the government, and we're going to deliver the product, but we may need a little bit more time.
yeah. So that just lead right into my side. From the real estate side,
Gotcha.
I have to alter certain dates within the contract, certain contingencies, closing dates, third party financing, conditional approval dates and things like that. So the contract has 6, 7, 8 places where certain things are time sensitive. So if you know that this could happen, you should build your contracts and structure your contracts for those potential delays. You can always, most things contracted, there are very few things in the real estate contract that are hard and fast dates. Most of them are suggested dates. There's a couple that are really hard and fast where you can lose money, but most of them are on or before or on or around. So if you know this, you just structure your contracts a little bit different. And we say this comes out in every single show. That's why it matters who you're in business with. So if you're working with a lender that doesn't do a lot of loans and doesn't realize that the tax transcripts could be delayed, or doesn't realize that other things can be delayed, they may have you write a contract that's short, and you could be in default or in jeopardy of a contract there. So the biggest thing with us is just having the awareness and to be able to structure things so that prepare for the worst and execute and plan for the best. So it's just caused the way we structure our contracts to look a little bit different.
Let me ask you, gentlemen, this: with the shutdown
So if we,
and some federal workers being furloughed, is there any relief on the mortgage side for them if this goes, let's say, beyond a month?
When you say relief, you're talking about to the actual workers or to the
Well,
parties?
it's kind of like with the mortgage companies with payment forgiveness, or let's say if you can't pay your mortgage because you've been furloughed, you're not getting a paycheck, even though you may get back pay when you go back to work. But right now, the first of the month, let's say you can't afford to pay your mortgage. Is there any relief from the mortgage companies and for government workers when this happens?
I'll take that one. On my side, no. There's, it's unfortunately it is dependent on you to make your payments, make them timely. If they're not paid on time, yes, the mortgage company has all their rights to report that, which does affect your credit score, which does affect your interest rate or your ability to buy. So we definitely are talking to our clients to make sure they're on top of that. They can't help if they get furloughed, and sometimes it just may not be the time for them to buy if they're not able to, circumvent that.
Yeah. The one thing that I have seen just along that line is just some of my, we have lots of lenders, but we have our main go-to, like Brother Tirrell or whoever we use on a regular basis. But I've seen 2 or 3 emails from credit unions that I've worked with in the past that are offering government employees, low to no interest loans, or loans that if you're a federal employee, you can get 5,000 or 10,000 or whatever based on your type of salary and not have to pay maybe for 90 days or so. So that's not directly tied to the real estate process, but I've seen that from a couple credit unions to say, hey, if you're on furlough or if you're affected by the shutdown, you can bring in your pay stub, and based on your earnings, we could maybe give you an advance or something like that. So I've seen that. So that maybe that's indirectly speaking to what you're saying.
Yes. Well, it helps buys you some time at least.
yeah,
Mm-hmm.
yeah, that, because I can see that could be a major issue depending on how long this goes on. That could potentially affect quite a few people.
Correct.
One other impact.
We do have a question in the chat line that I want to make sure that we get out. This is from Audrey. Says, does the shutdown affect federal contracting for the real estate sector? Does the shutdown affect federal contracting for the real estate sector? I'm hoping that that resonates. I'm not sure that I understand what the question is referring to. But
Yeah. I'll take that one. From a lending, standpoint, we're going. One big thing we have to do is we have to verify that your job is still intact. So if you have been shut down and there's no guarantee when you're going to be back to work or what's going to go on, yes, it's going to affect it quite a bit. We're not going to be able to. We don't want to put you in a bad situation.
Right.
So we're going to verify that your job is coming back when it's coming back, and it's coming back with the same amount of income. So we have to verify all that to make sure that you are able to afford this home that you're trying to purchase, based on the reality of your shutdown. And we're definitely going to lean on the side of caution for you. A lot of people may think it's us affecting them, but we would rather you not buy a home than buy a home and then have no income. So we don't put you in that situation either.
Yeah. Initially, the question went over my head, but I think I can now expand on it. To be honest, that's not any different than it's ever been. There's always a VOE, verification of employment, up front as you qualify for a loan. And Tirrell can tell you, I don't know if it's 2-3 days or a week before, there's a second verification to make sure you still have that job. I lost the contract a 3 months ago on a house that I was selling because the person lost their part-time job between going under contract and closing date. So they had used that supplemental income
to approve them,
qualify. Mm-hmm. So it's not directly a shutdown question, it's a VOE question. So they're absolutely, they may be doing a VOE 2 or 3 times in the process now, but that's something that has always existed, an upfront verification of employment and a kind of 11th hour verification employment to make sure you still can qualify for this mortgage.
Yeah. Kind of what we do is we verify your employment, and we have to get a box check that your likelihood of employment or continued employment is likely. And after we fully approve you and before the closing, we do call back to make sure you're still working there. Just a little caveat. I had a client one time that, he got into an argument with his boss, and he was a great client, and he decided he thought he can just quit because he can get a job anytime he wants to. And, we weren't able to approve him. We bought a house later after he got a job, but that house fell through because he quit. And we do have to verify that you have income coming in that can afford this home. We can't just take your word that you can get a job anytime you want it.
Now, with government agencies like FHA, VA, or USDA, how is the shutdown affecting those loan products?
I'm definitely going to answer that one extremely, especially USDA. USDA is one of the programs that we deal with the government a lot, and we have to, when we approve a loan with regular FHA, VA, conventional, they put the onus on us. With USDA, once we approve your loan, we send it to them to verify our work, and they have to give us their approval. So their time frame of approving loans is a lot longer than it used to be. So a USDA loan, where it used to take, when I fully approved my loan and I sent it to them, and they could verify everything that we did was correct, and they're willing to let us alone with them, may have been 3 to 4 days. Right now, it's probably 8 to 14 days. So we have to make sure we do our jobs quicker so we can get it to them, because it's all based on when you put your loan in line. They're not going to move you up. They're not going to cater to anybody. It's going to be based on when we received. It'll say we're working on applications received October the 5th. We're working on loans received September 30th. So we know if we submitted that loan for final approval on October 7th, they're on October the 1st. We don't know if that's 3, 4, 5 days, could be 2 days, depends on how many applications were submitted, between that period. So USDA loans actually are taking longer for me than they have in the more recent, past.
Is the shutdown affecting that time period, or it was just making
it affects it because it's less people. So when you have a government shutdown, you have less people that can work on the loan. So if you had, 10,000 people looking at deals and now you only have 2,000, it's times five. So it depends on, the shutdown is definitely immensely affecting us in a lot of areas. I'll also say this: we have something called the mortgage credit. We call it MCC, where um, we're allowed to increase a person's income based on. We can give them an MCC voucher saying that they are going to receive more money back from when they file their taxes. Well, because of the government shutdown, there was less money to give. So the money that they were giving us has decreased significantly. For instance, one of the functions I work with, TDACA and TSHAC and different ones like that, they ran out of money. And they ran out of money because there's less money out there because of the government shutdown.
Got one other direct impact that probably hadn't thought about of that. So the big one is delays. That's the big one, delays.
Yes.
Those are the obvious ones, but one that folks may not know is the National Flood Insurance Program.
Mm-hmm.
So if you're buying a home in a flood zone, and literally we just closed one last Friday, thank God, in Galveston. It was a weekend, going to be a weekend / Airbnb property, and it has to have flood insurance. So if we were in that problem right now with no flood insurance, and I think we might have a first-time guest, Victor Green, on, who Brother Tirrell is going to be working with his daughter to buy a first-time house in Dallas. But
Yes.
so he knows insurance, and he comes from the claims world. But so flood insurance is not being issued right now. So that's a real direct hard no right now. If you're trying to buy a house in a floodplain, you cannot get flood insurance. It's a national federal government program. So there's no flood insurance. And another real life example where that would come in, not in a shutdown, from an insurance perspective, anytime there's a named hurricane that gets within a certain latitude, longitude of U.S. territories, they stop writing flood insurance. So that's something
Correct.
The flood house in a floodplain all the time. But now it's anytime. We got nothing to do with a hurricane. The federal government is not writing policies right now just because that department is closed. So you can't buy a house in a floodplain right now.
Yeah, and I would like to state that a lot of the buyers or the clients, they think that's a knock against them. We're actually there to help you out. The last thing you want to do is allow us to close your house and you didn't get flood insurance and then you get a flood. So we're making sure you're protected because we don't want to put you in a bad situation. We're trying to make sure that everything goes to your liking and to make sure that you are protected and you're safe.
Okay.
So that's pretty interesting when you bring that up in terms of the flood insurance issue. So does that and maybe I missed this because again, I'm going in and out a little bit. How does that impact the customer's ability to be able to protect their homes in those flood zone areas or near flood zone areas?
If someone has flood insurance, they're fine. They don't suspend your policy or give you a rebate for 35 days while the government shut down. If you got coverage, you got coverage. The money in the reserves is there. They're just not taking on any additional risk right now.
Right.
So when that hurricane gets close to the Florida Keys and it's
that's temporary.
Well, yeah, it's temporary until they fix it. Yeah, until they fix it, because we can't allow you to buy a house that's not protected by flood insurance if you're in a flood zone. We got to make sure that you're protected. You don't really want to buy a house in a flood area that's not protected.
Yeah. So in the hurricane example, it's temporary until the storm makes landfall or dissipates or whatever. Then they turn it back on. It's temporary now, but permanent until this shutdown ends. They're not writing no flood. It's not on and off right now. It's off right now. You can't get flood insurance.
And just to add to what Brother Dwight is saying is, even when they turn it off, when they turn it back on with the lender, we have to send somebody back out there to make sure that you weren't affected. Because we don't know if that house was affected by a flood when you were in a flood zone. Every house isn't affected, but we're not going to lend until we get somebody out there to re-inspect the home and say, hey, we're all golden, we're good to go. Let's lend on this client because we want to make sure you're protected. We want to make sure we're protected. It's our asset. We're lending on the home and the customer's credit, but we're also lending on the home. So we want to make sure that is a lendable property. And if it's not, all we're going to do is say fix it. And when you fix it, we'll send an appraiser back out to say, hey, everything has been taken care of and we're ready to lend. So it does take more time.
So you've answered one of the scenarios I'm going to ask you about, like what happens if the property is damaged by the storm in the middle of this process. But let's say the seller get the property fixed up and property is better or appraised for more than it originally appraised for. Can you go back and renegotiate the price, or you just pick up the process where you left off and continue with the closing of the deal?
Pick it up where it's left off. I'll let Dwight answer that as well too. We're not going to reappraise the home. We're going to go by the original appraisal, and we're just going to have the experts say that it's in good shape. We're going to have the appraiser go back out there and say the house is still in good shape. We're not going to say, oh, now that they did this, the house is worth more, because there's a few things you can do to make it worth more so you can sell it higher. We're just going to say, is it lendable or is it not lendable?
Okay.
And the appraisal belongs to the buyer, so the seller doesn't really know what it appraises for anyway. That's
Correct.
The buyer pays for that product, and it's their confidential information. The only time the seller typically gets made aware of an appraisal value is when it's low, and then in that case, it's being renegotiated against the seller. You still want me to buy it? We thought it was $400. It came back at $380. We'd still love to buy your home, but the bank's not going to loan us $400. So now can we renegotiate our purchase contract down to $380? So that's the only time the seller really gets aware of how much they appraise for. When we make a contract for $400 and it appraises for $423, my folks just think how great I am. Like, hey, I negotiated.
That's right.
You have day one equity in your home, but we don't. And many times the other side will ask, well, how much did it come back? And the typical thing what they're going to say is it made value.
It made value. All you need to know. So me being a lender to the buyer, what people need to understand is that my loyalty is only to the buyer. It's not even to his realtor. My loyalty is to the buyer. I can't even give the appraisal to his agent, to my buyer's agent, unless he gives me permission. Everything I'm working for that buyer. So if the house appraises for more, I say nothing. If it appraises for less, I still need permission from the buyer to give it to the seller to see that it appraised for less. If it does appraise for less and they want to fight it, there's 3 ramifications that we can have. A, we can lower the price. B, I can send it to if they give me permission to send it to the seller, they can say, hey, this appraiser did a bad job and had bad comparables, and here are 3 new comparables, and we want to renegotiate it, and we want you to look at it and see that the appraisal was bad, and they can make that work. The third part is that the buyer can say, I don't care what the appraiser said. I still think the value is what I want it to be, and even though it appraised $20,000 lower, I'm going to buy it at what it's at. We're not going to land. We're going to land at the lesser of the appraised value or the purchase price.
Okay.
So we're going to go off of that based on what the seller, what my client, the buyer, tells me to do.
Got it.
And I can jump in here. Totally interesting spin because of who our audience is. It does happen quite often. Appraisal bias is real. So sometimes you'll get a low appraisal if someone knows you, I've probably had 10 instances, and probably 8 of them were people that were black or brown. It's just a fact. Yeah. So you need an agent that truly knows the value of the home and has the skill set and the knowledge and the deal to go against appraisal. So every time I went against appraisal, I have a pretty strong record of appealing appraisals, and in most cases fully appealing them, but in all cases getting some movement. So that's something that an average realtor wouldn't even know that they're capable of doing. So, but I always put my sellers of color. That's part of my consultation process when we put the home on the market. We make sure we're not around when the appraiser comes. We make sure we don't have our Howard University or Texas Southern or Paul Quinn degrees on the wall. We make sure they're gone well before they get there. So you want to don't give them any ammunition to work against you. So that's part of coaching and consulting your clients at the highest level, whatever it may look like.
And
Okay.
yeah. To answer on that too, I believe it was 2020, but I don't want to say which news station was that brought this out. There were some facts to what Brother Dwight is saying. They showed homes that were, appraised, where they showed people had their pictures on the wall, different things like that, and it was black and brown people. They came in a lot less, and then they were able to get their white counterpart friends to put their pictures on, and brought another appraiser in, and it came in significantly higher. So yeah, that is reality. It's ridiculous, but it's a reality. It's an appraisal, and here's what I want to: appraisal is not a fact. An appraisal is nothing more than a professional's opinion of what somebody will buy your house for. So there definitely can be some bias in that. They don't have to, it's not a factual thing. It is based on what sells in that area. This is what we believe that somebody will buy this house for. So if you have somebody that is not forthright and that they have some prejudice against you or just don't like you as a person, they can affect your value.
Is that built into the real estate market? Is that the market itself doing that, or you think this is an individual bias against people of color?
I think it's two things. In some cases, it's a strong bias, and I see it in the higher price points quite often. And sometimes it's incompetence. We went through a season, when if it ever gets back to a strong seller's market, there's lots of competition. They can't keep up with appraisers, their backlogs. They got incompetent appraisers. So it matters who you're in business with. It matters that you hire a professional like Brother Tirrell or myself that knows when and how to advocate for you when you can, or better yet, to even not put you in a situation to prevent you from even getting in a situation to have to deal with that. So it absolutely matters more than ever in today's climate. That's a very difficult real estate market, that you're hiring professionals and not just your cousin. This is not about taking money off someone's table, but this is not a good time to be doing someone that does one deal a year or something like that.
Correct.
Hey, Tom, I think we got a couple more people join the chat line.
The single largest transaction most people make is real estate. So you don't want to be hiring that to someone that does it infrequently. You're going to do it someone that does it professionally at a high level.
And the reason you don't want somebody that does it infrequently, somebody like Brother Dwight has way more connections than somebody that does it infrequently. He's going to get you the right people that's going to go and check out your house and look for certain things that are wrong or right with the house you're going to buy. And somebody that doesn't do this as a living, somebody that doesn't earn their living on this, they don't have those connections to give you the right person to evaluate the house and say, hey, they need to fix this before we buy it. So there's so many things that a professional such as Brother Dwight is going to do for you, other than your cousin or somebody or a friend or anything like that. If they're not doing this on a constant basis, they don't have that professionalism. They don't have those relationships to make sure that you're making the right decision or getting the things fixed that need to be fixed before you buy this home.
Okay. So, Tom, I think we got a couple more people join the chat line. Let's give them a shout out.
Gotcha. There are, I do want to acknowledge a couple of folks on the chat. We have Miss Counselor Patterson, Elisa Patterson on the line. I want to thank her for joining us also. Mickey Lawrence, I want to thank you for joining us on the chat line as well. I have a comment from Elisa says, yeah, they've been sued for discrimination against minorities, and this was obviously something y'all were referring to earlier. But out of curiosity, and I know that this is probably a very hard sell or uphill push, but when you look at the institutional bias that affects people being able to sell their homes at a fair price, be black or brown versus white, and this has been a issue that we have been talking about for decades upon decades. What is it that you can do at an institutional level to stop this from happening, if that's a fair
Okay, I'll
question?
grab that one first and let Brother Dwight go out there.
If all you got to do is change, if all you have to do, if all you have to do is remove the Texas Southern and the Prairie View A&M thing, and then put up a Texas A&M or University of Texas, or remove the pictures from the art that may come from Africa and put up the pictures that may come from France or something like that. I mean,
No,
but nothing
that's
else
not all you have to
changes.
do.
Nothing.
I think the most basic thing you have to do is hire a true professional such as Brother Dwight. He's not gonna. I mean, he works for you, but he's going to give his professional opinion based on what he sees from what's called what he sees in terms of what's being listed out there. He's going to tell you what the house should sell for. So something is not going to pass his smell test if he knows that your house should sell for 600 and your appraisal comes at 500. He's not just going to accept it. His years of being a professional and seeing what's going on, he's going to know that's some bad appraisal. So he's not just going to accept it and say, let's just lower your price. So you hired yourself with somebody who's a professional that says, I don't care what that appraisal says. This is incorrect. We're going to need to do something differently. And that's when we can, order a new appraisal, make some different steps and make sure that it sells at the right price and that our clients buy at the right price.
Okay, we have a question on the chat line. Do you recommend?
Now, but you have to pay. You have to pay
Yes.
for these appraisals, though, right?
You do? They're about $700 right now.
Ooh. We do have a question on the chat line. If one of you gentlemen can answer it, they want to know: do you recommend staging the house if you are the seller?
In most cases, we do. We're never trying to spend, let me speak for my team, we're never trying to spend our clients' money unnecessarily. But if you hire and the motivation is there and the goal is to sell it, in many cases that is necessary. And you want to compete. And because it's a buyer's market, buyers have choices. So you need to be the shiniest and the prettiest object. You need to get people off the iPad and into the car because they can't buy it off the iPad, So sometimes that staging becomes very necessary. Sometimes it's something as simple as lighting. Sometimes it's reconfiguring your own contents, which may not be very costly. We're doing a ton of, not a ton, but a good bit of virtual staging right now, even AI staging.
Yes.
There's ways to do it without spending a ton of money. But
Correct.
In this market, if you depending on the motivation, depending on the amount of equity, depending on how quick you need to sell, there are lots of factors, but we are getting back into a season where that's necessary. If you're seriously motivated and you want to sell in a reasonable amount of time, staging is something that we're doing a lot more often now than, we went through a period of staging. Then we went through the pandemic periods when, you could get a sign in the yard and you had 3 or 4 offers. Staging wasn't necessary at all at any price point. But now we're back to that stage where if you're a serious client, it's something we need to be considering.
Yeah.
So
I mean, it's kind of like people.
And there,
Well, it's kind of like what he said. It's kind of people. They say you eat with your eyes. You like to see a pleasant plate. It's the same thing when you're buying a house. It's hard for you to use your imagination what this house can be if it's not staged correctly. So if Brother Dwight is selling a home, he's going to make sure it's staged correctly so you can see the potential of that house. Can it hold my bed? Can it hold the furniture that I have and still have room? So they're going to make sure they stage it correctly where the closets are not packed. They don't want, you to have every clothes you ever had in the world packed in there where people can't see that that's a spacious closet. They're going to make sure that they give you the right opinion of what this house can do for you.
So 2 questions real quick. One, does the fresh baked cookies work on for buyers when they come to view a home? Then the second one is on the chat line. What do you do when other appraisals come back differently? So I would imagine, I don't know if that's ever the case where a person orders 2 appraisals, but or if you ever had that situation. But that's the question. What happens if the other appraisal comes back differently? So I'm not sure how the other appraisal comes into a factor, but let's say the person
Okay.
did order 2. Two different appraisers.
You want me to take that? Yeah. So basically, one of the things you need to do is do your homework up front, price it properly. I tell my clients, all of them, even though I'm a professional, I tell them pretty candidly that you don't set the price of the home, neither do I. The market sets the price. So you got to price it properly to begin with. Then you need to listen to what the market is telling you. We have a particular target slide that I use that says, hey, if we're getting this many showings and no offers, we're probably off by, I have enough data to say we're probably off by 3 to 5%. And we need to listen to what the market tells and make an adjustment and not wait too long to make that adjustment, etc. So price it properly to begin with, realistically, properly based on its condition and the staging and all those things, and then pay attention to what the feedback is saying. So if you're not getting feedback, that's a form of feedback. So you need to be adjusting timely. But to answer that question, we got a contract. Someone was willing to pay what we were asking, and we all agreed that it was worth 400. And then the appraiser came back and said it was, 370 or whatever. Tirrell's already told you the three options. But one of the things I'm going to do is I take pride in going to bat for my clients every single time because I know I'm confident that I've priced it properly to begin with. So I'm going to, number one, get a copy of that appraisal from the other side and explain that we need to work together as a team to accomplish the goal for both of our clients. Then I'm going to personally get in touch with the appraiser. And sometimes they don't want to talk to you, but they can. And I'm going to find out exactly what criteria he used. And I'm going to find out what criteria can I use. So if you make a mistake, and you send something he's already used, you've just wasted because you're only going to get 3 attempts to prove him wrong. So you can take, he used 3 or 4 or 5 sets of houses to come up with his valuation. We typically get the chance to kind of strike 3 of his and insert 3 of ours. So you need to know how far out did you go? And if they won't tell you, I can look at it and map it. Okay, he was looking at homes as far as 3/4 of a mile out. He was looking at homes, 12% bigger and 8% smaller. So I'll find homes. I'll basically use his own ammunition against him, but I'll find ones that have sold in the window that he's used, in the radius that he's used, in the square footage that he's used, that sold for more, and do the math, and then represent him and say, I want to strike 1, 2, and 6, and I want to replace them with this, this, and this, and use the same data set that you used before. Now you spit out a number, and I know that number is going to be better because I use your criteria to prove you're wrong.
Okay.
And
again,
again,
one appraiser was to come back at 375, and another came back at 425.
Well, let me answer that. 90% of the times you only have one appraisal.
Right.
I
can't even imagine a scenario we have two. But
yeah, it has to be a jumbo. It has to be a jumbo home before the lender requires 2 appraisals.
Okay.
On a regular home, it's only 1 appraisal. It has to be the lender that found something so egregious with this appraisal that he won't make the changes we need him to make based on the realtor giving us better comps, that we say we're going to strike that appraisal and we're going to go a new one. So if you get a second appraisal and the lender orders it, we're getting rid of that first appraisal. It didn't even happen. Okay. We're going to say that there's something biased or something we don't like, something we don't believe in, and it has to be egregious that we allow it to get another appraisal. So you're not just when you buy a house, we're not going to order 2 appraisals. We're going to order 1 for the most part, unless you have a jumbo home.
Okay.
Let me ask, we have maybe close to 10 minutes left till the end of the show, so I just wanted to get a couple of things out there. This has been great feedback. We've gotten some good questions from our audience on the chat line. So if there are any other questions for our folks who are watching, please put those on the chat line now so we can get those addressed before we close out this week's show. This is kind of a little of a curveball, but this is something that maybe one or both of you can respond to. One of the things that we're seeing is that, of course, AI is affecting practically every industry from top to bottom. What are you seeing, and how is AI, if it is, impacting your industry, the work that you're doing, your customers, et cetera? Because, of course, it seems to be pretty much ubiquitous across all industries.
I'll let Dwight handle it.
Okay. Yeah, we're so AI. There's a big concern that AI is going to replace us and things like that. What I have learned is it's not going to replace us, but it's going to probably replace us that don't adapt to it. So I've started to adapt AI into my business as much as possible. I use a lot of AI to communicate with my clients that are in a nurture mode, like thinking about buying, thinking about selling, so we can AI can constantly weekly, bi-weekly, monthly, quarterly, yearly, whatever the frequency is, keep getting them information. AI can tell me when they're doing something. So the software that I use in particular will tell me, hey, Alyssa is on your website. She hasn't been here in 30 days or more. She's surfing your website. So that's giving me like, okay, why is she ain't been on my website in months? Why is she looking? She may be curious. So it may prompt me just to give her a courtesy call. Hey, Alyssa, I was thinking about you. What's going on? Oh, well, by the way, yeah, I was on the website. Now I don't tell her AI told me she was on the website. She thinks I just randomly called her. So that's one way AI is helping me stay on top of my clients. My CRM also tells me, hey, Brother JR has looked at this same house 6 times. Well, there's a reason. If somebody looking at the same house, they want it or wishing on it or dreaming on it or something like that. So we're using AI in terms of our CRMs and databases to know when and how to communicate with people in just in time. That's one way. I'm using AI with some of my emails and letter writing and marketing campaigns. You heard me say earlier, we're doing AI or virtual staging. We're also using AI in terms of data analytics, and not that I'm ever going to let AI replace me, but when I do a market analysis, I used to literally have to go through the active section and the pending section and the sold section, and I got a sheet of paper with all kind of math on it. Now, when I pull a market analysis, I get a nice little printout to the side of the screen that in less than a minute, it's analyzing the data for me, and I just need to proof it and make sure it's right. So those are some of the ways that we're using AI. Those are some of the ways that we're using it. And I think no one's in danger of being replaced by it unless you dig your heels in and say, hey, it's not going to replace me. I don't need it. That's dumb. You need to, change is the only constant. And that goes back to, hiring professionals. So we're going to use it to some degree because we're professionals. When the industry change, we change.
Yeah, on the lender side, I'm using
Tirrell,
it a little bit differently. I'm using it to get more. I'm getting more information to somebody like Brother Dwight to get more loyalty from him because I'm getting I'm going to understand when you listed a property that I've already sold you. I did the lending on it. They're going to tell me that uh, you know, uh, Brother Duncan has listed his house, and we know that if you list a house, you might want to buy a house. So I'm going to call Tommy up, and I'm going to say, "Hey, I see that you listed your house. Are you looking at buying a house? How was my services?" And he's going to tell me how it was, and I'm going to remember that you sold or you bought your first home with Brother Dwight, and I'm going to say, "Hey, Brother Dwight, I can reach out to him and let him know you're in the market." And so he's going to love me when I call him back to say that, hey, somebody we did a loan with 7 years ago is now selling their home and they want to buy a new home and they want you to represent them. So I'm going to make sure that as long as you had a good experience with myself, you had a good experience with the White, that you're going to use us again, and that's going to create more business for us. But you're also using people that you like. So I definitely love AI, and I make sure that I'm also using it in my business as well.
so Brother Terrell, explain to everyone what a jumbo
Okay, a
home
jumbo
is.
home
That's one of the-
it's a conventional loan. First of all, conventional says what the maximum home can be bought by the average buyer. So I need to
okay,
get the loan amount. I'd have to look it up, but let's say it's 750,000. Anything that is above that is considered a jumbo, whether it be 3 million, whether it be 760,000. If the jumbo loan amount is 750, anything above that is considered a jumbo. Anything of what the average conventional loan will loan on. Now, jumbo loan usually carries a higher interest rate as well too. So when you're buying out of the norms of what they say that the top of the average should buy, that's considered a jumbo home.
okay. And then another question came in, probably more for Dwight, but probably Tirrell, you can chime in also. Do you guys just sell homes or do you sell raw land? Because one of the people on the chat line is interested in buying some land.
Uh,
And contact. So let's put your contact information up there so she can reach out to you after the
yes,
fact.
that's a great question, Tanya. I'm not sure where you are in Dallas area, but we'll spin it because this show is super valuable, and that's why you guys keep coming us back. If anybody's got extra money they want to evaluate, as one thing I learned as a young realtor from an older realtor, we were trying to buy this piece of property and it was overpriced. And we tried two or three times over the course of a year and a half or so. And the realtor told me, he said, Johnson, you're gonna make a good realtor one day. But he said, there's one thing out there they're doing. They're not making any more land. They're not making any more dirt. So and I'm friends with them to this day. That always stuck with me. So land is a big part of my business. I'm getting ready to list 96
Same
acres
here.
out in Caldwell County for an African American family. I'm so proud because it's a bunch of heirs and they're super organized and they're on the same page. That rarely happens where they've done all the airship and all that stuff. But land is big, and then I sell here. One of my niches is luxury space, so I sell a lot of homes on acreage. So I do a lot of land. The best vendor that I have, and I hate to say this, but it's usually those credit unions that have better deals on land. So
Right.
yeah, if I'm doing right by you,
Okay.
even though as much as I love Brother Tirrell, he's probably not going to be able to compete with one of my credit unions on land. So we do land all the time. Typically, you're going to have to put 20% down. Typically, you're going to get a 25-year amortization, but you're going to have a balloon. That payment's going to have to be paid off or fully refinanced in about 7 years or less. So we do land. If someone's wanting to invest on the heels of that story, there's a thing called the Texas Triangle between Dallas, Houston, and I think Austin. There are many, many large corporations coming setting up shop there. So if you have family that own land anywhere up and down 45 between Houston and Dallas, out 35 to Austin, that land's getting more and more and more valuable. So don't give that land away in your family. And if you have the opportunity to acquire some, that's a great place to be investing. And it's going to be, much, much more valuable in the years to come.
Yeah, and just for me, he's correct. I do land as well, but he's right. I don't do land through my company. We broker it off, and we do broker it with credit unions because I use their product in order to be able to offer my clients land. A lot of times, especially if it's going to be land that's not going to be rental, if it's going to be land that's going to be you're going to build a house on, there's a time frame that we give you to start building. So there's different caveats when it comes to that, but I can't. He's right. I can't compete. You know the average credit unions know they can't compete in our space. We can't compete in theirs. So what we do is we broker it out. We use their product, and we still do the same thing, but we have to accept that we're going to make way less than we do on most things just to be able to offer this to our clients. Because the last thing I want to do is give
Okay.
it to somebody else and lose that client. I want to make sure I can do it and just don't make the money.
Understand.
Mhm. And I'll jump right back
Okay.
in. I know we're getting to the top of the hour. I could stay a few minutes if we need to. We started late, but I
Yeah.
looked up those jumbo rates. It's 8,065 in everywhere except
Yeah.
Hawaii and Alaska. It's about 1,200,000 in Hawaii or Alaska to be considered jumbo. And then I think Tanya may have had a question about if it's a good market to buy land. Depends on where it is, but if
Yeah.
you can, if you got the right person, our answers are biased. It's always a good time to buy everything real estate. That's just how we believe if you've done the research. But there's some places that are probably better than others. So if you have something specific you're looking at, make sure you get my number from brother Tommy, and I'll find out where you're looking and partner you with somebody in that location.
All right, very good. But we are at the top of the hour. We want to, boy, this time flies so fast. But we want to thank you both for joining us again, and we hope that this has been listening this evening. Of course, we'll plan to have you guys back in about another 3 months and a quarter at the beginning of the year, and I'm pretty sure there'll be some very interesting stuff going on by then as well. So we'll let you guys have any closing comments, and then we'll close out tonight's show. Dwight and then Tirrell.
Yeah. Yeah, definitely looking forward to the January show. And again, we try to stay away from politics, but whoever replaces the new Fed chairman is going to have a major impact on what rates do and what real
Yeah.
estate does going forward. Whether it's good for the economy of the country or not, that is a whole other different question. But they're already trying to figure out who's going to replace Powell because he's out. At one point in time, they were trying to force him out,
March.
along with some others. But he's out in March for sure, and we know who's placing people. So it will definitely be interesting. Be
Well, it'll definitely be a rate
crazy interesting.
reduction.
But looking forward, we'll be here
That's
for
gonna be
whatever.
part of the
We
job.
will be here for whatever it is, and we will be informed in that space. So we're going to pivot with the market and with the knowledge and whatever's happening and what you need to know by then. We promise to stay out in front of it.
Yeah, and when myself, I like to end with saying that it's never too soon to contact me when you're ready to buy a home. You could be 2 years out. One thing that I pride myself on and that helps my clients is I help you strategically place your credit score as a position to where you get the best interest rate. So I would like to, make sure that that you're able to afford it income wise, but also credit wise, that you're going to get the best deal when it's time to buy. I've had several clients think they're a year out, and they call me 2 months before, and we could have helped impact their credit score and get them a much better deal. So contact me as soon as possible so we can start working on that, and we can buy a year later, or you may be ready to buy now and think you're not. Your credit score may be better than what you think it is.
Okay. And I just want to say that I know Dwight's in Houston and Tirrell's in the Plano, Arlington area. There's offices all DFW area. But they have contacts all over the country, people. So no matter, like I said, no matter when you plan on doing it or where you plan on doing it, reach out to people that you could trust first. And if they can't help you, they can point you in the right direction and put you in contact with someone who can. So start with them first with any property questions you have, mortgage questions or purchase before you go out and hire anyone else. Even if you want to vet another real estate agent, check with Dwight first to see if there's any negative comments that you've heard out there, or to check on the experience level. Or if you're not sure about the financing and you need just a second opinion, go out to Tirrell and talk to him. So as soon as you decide to do this, go talk to both of those gentlemen first. That's your starting point.
Yeah. Real quick, just to pivot on that, and we do that for this audience, for most audience, complimentary, no expectation, no obligation, but specifically for this audience, like it's a pleasure to be able to answer a question. If Tanya calls me, I don't think she's in Houston. It's not somebody that I'm going to directly benefit. It's not about that. It's about coming from contribution. This is what Tommy and Jimmy do week in and week out, every Wednesday night at 8:00. So we're an extension of this family. So reach out to us if we can, support you in any kind of way on those things.
Definitely.
Yes, we praise both of you guys. Thank you so much. Close it out, Tom.
All right, folks. All right, and that is our show for tonight. We hope that you all found this valuable. And of course, we invite you back next week on Wednesday night, where we will give you the most relevant news in our community. Of course, we appreciate you. And if you haven't done so, make sure share this information with somebody else who can use it. Like this show if you've gotten some value out of it in any way. And of course, if you haven't done so, make sure that you subscribe to this channel. And we will see you back Wednesday night, because Wednesday night, Jimmy, if it is Wednesday night,
Is Black Man Speak.
good night, everyone.